Well, good morning, good afternoon, whatever that might be for you folks. This is Ryan Litchfield, and it is time for our Trading Coaches Playbook, and it is time to begin. Please, if you wouldn't mind, give me a signal that you can hear me, that audio is okay. We have a chat room going on, and Charles says, good afternoon. How are you, buddy? Just want to make sure that you can hear me okay. I'm getting a lot of hellos, but nobody's saying, yeah, we can. Oh, there we go. All right. All right. Well, let us begin then. Let's see. I'm moving something right here. All right, there we go. We can't see your screen yet. Well, that's true. That's true. Let's begin with the screen sharing, and then that should change right about now. Okay, confirm you can see the screen okay? And we're ready to rock and roll. All right, there we go. All right, guys, welcome out today. This is our disclaimer that we always put out. We don't take this lightly. It's just that we do it every time. And so it gets a little bit redundant. But the fact is that we're not going to be giving you any trading advice on specific issues, i.e. markets or specific stocks or specific trades that you should take literally as advice or counsel or wink and a nod. It's not. The market is a risky place. Everybody who is involved in the market has to understand that there's risk, and that we are doing education here to try to improve your skills, not guiding you through individual or specific trading. Okay, so don't construe anything to be that way, and we'll be just fine. All righty. We always have a calendar to review here, and that's right up there in front of you right now. I always give props to Rob for the effort that it takes to produce content. Guys, anytime that you are doing anything online, there becomes an expectation to produce quality content and an ongoing stream of that content to satisfy the expectation of those that are subscribing and participating. It's a big job. I've done it in the past. I'm doing it now, but on a very reduced level. But nonetheless, it's a yeoman's job, and I can't say enough for Rob because of the effort that I know it takes to do that, and I know where his heart is and the effort that is put into it. It's very powerful, very genuine, and take advantage of it. This makes me smile like you can't believe, guys. This is an evidence of what I just said about Rob producing ongoing and continued quality client or content. My good friend, good friend, Trip, student, it's fantastic to see him in a position to be able to offer training and coaching and guidance from his experience. He's had a long career. What I love about Trip is what I love about a lot of the students that I've worked with, and that is their commitment to continually grow. There's a humility, there's a level of humility when somebody keeps coming back to a coach and says, teach me some more, teach me some more. At some point you can say, wow, I don't have anything else to teach you. But the truth is that we're all students and should always think of ourselves as students. I certainly do. And I learn from anybody and everybody that I can listen and sit at their feet, because perspective from different standpoints is always additive. It's always additive. And so congrats, Trip. It just thrills me to see students becoming teachers. That's just a wonderful thing. So kudos, and let's begin. So today, guys, I want to go in a direction that we've been kind of moving to the last couple of times we've been together, and that is we're going to be going directly to charts to do some application of the skills and the guidance that I've given you in the past in terms of how to utilize tools and certain types of skills to analyze and make better decisions in your trading. And so I'm making this reference to fishing here on purpose. There's, I guess, different types of fishing. My experience with fishing has been very mixed. I've had some very frustrating experiences with fishing, and I've had some exhilarating experiences with fishing. But fishing versus hunting is a little bit different. And this is a correlation that I think is important to apply to your trading. When we think of fishing, most of the time we think of bobbers, we think of trolling, we think of casting. Now, if you're not a fisherman, these terms may not mean a lot to you, but a bobber is simply a flotation device. And you may take a reel with a lure and or a bait, a worm, whatever, and you throw it as far out as you can into the pond or to an area in a river that you think is a good spot. And the flotation device, the bobber, stays on the surface and it holds the bait at a certain level. In other words, you're setting the condition. Let's say you've got a 20-inch or a 24-inch line below the bobber, which means your bait is going to sit at 24 inches below the surface. You put a specific type of bait. So maybe you've got a worm on there, you've got some salmon eggs or something. And you're setting the conditions, and essentially you're saying, I will take a fish who comes to me at 24 inches below the surface and happens to like this particular bait. And that's the bargain you're making with the fish. And you may sit there and wait and wait and wait. You may have to pull in the line at the end of the day and say, wow, I put that in there for 3 hours and no fish was willing to come up and take my bait at 24 inches and this nice juicy worm or fish egg, whatever it is. And that's just the way it works. You may have it out there for 5 minutes and have a fish grab onto it and start to pull it in, and everything looks wonderful. And then the fish shakes itself off the line, says, nope, sorry, just kidding, spits it out of its mouth and swims away. Or you could bring it all the way in and you have success. I have a great story now I can tell. I caught a fish. Trolling is a little bit different. You move in the water, whether it's in a canoe or a boat, but you are moving and you are putting the bait back there and you're traveling at a certain speed. It's going to be at a certain depth. It's a certain type of bait. And again, you're making a proposition to the fishing market, to all the fish out there. I will engage with you if you happen to like this setup. And if you do, good, you hook onto something. If you don't, you don't. Casting is a little bit different. You cast way out with a fishing reel as far as you can, and then you reel it back in. You can reel it slow, you can jig it, kind of jerk it a little bit, you can reel fast, but you are a little bit more diverse in what you're proposing to the fishing market, all the fish out there. How about for this? How about if you like that? I'm going to let it drop down a little bit. I'm going to jig it up off the bottom. I'm going to go real fast. I'm going to let it slow down. Either way, in all those circumstances, you are engaging in a proposition with the fish out there. You're saying, I will engage with you on these terms, and you hope that somebody engages with you on those terms. If they don't, they don't. If they do, they do. You may hook, you may pull them in, you may not. Okay, that's trading. The correlation I'm trying to make there is that that's the way we trade. We set up conditions. We set up conditions, including how much we're willing to risk, how long we're going to stay in the trade, at what price we would enter the trade, at what price we would exit the trade. We set all these conditions, and then we wait to see what the market does. We don't go hunting per se. We don't force the market. There's an adage that I have used that I will repeat today. Don't try to beat the markets. And people, I hear this language, it's ingrained in people's subconscious that they're in some kind of competition with the market. and the market beat them, or the market hurt them, or they beat the market and they made a bunch of money and they won. Guys, it's not about winning and losing. You don't beat the market. You never beat the market. You can't control what the market does. My proposition is that you learn to peacefully coexist with the market. Okay, you coexist with it. You can't beat it because you have no control over it. And if you make money, it's not because you beat the market or beat anything. You had the right setup and it came your way and you caught a fish. Yay for you. Okay, you do the exact same thing tomorrow and it may not work. You do the exact same thing 3 days from now and it may work 3 times in a row. Guys, you're dealing with something you cannot control except your exposure. You can set the conditions, that's it, but you don't control anything. Now, there is some exciting, not necessarily exceptions, but I want to show you this picture. This is the way some people go after the market. Now, this is not modified. This is not doctored. It's not an AI generated. This is an actual guy in Australia that jumps out of a helicopter onto sleeping marlins and wrestles with them until they shake him off. But this is what he does for fun. Marlin apparently will sleep close to the surface in the sunshine when they rest. They go into a resting state, literally sleeping, and you can approach them with a help from a helicopter above without waking them up. And this guy got this crazy idea that he would bring in a helicopter and hover right over top of him, and then he dives out of the helicopter and lands on the marlin and fights with him and wrestles with him until they shake him off. And he thinks that's cool. Guys, that is not a good way to fish. It is certainly not a good example of what you're going to do to the market, guys. You don't survive very well taking this approach in the market. Okay. So what you want to do is learn to peacefully coexist with the market, not beat the market. And so what we're going to do today is we're going to go and do some fishing. We're going to do some charting exercise. I want to open the field up to you to look at any particular stock or index or anything you want to look at. And I will utilize the approach that I use to charting, to setting up conditions, to setting up expectations, evaluating, building the rudiments of the dossier for trading a stock, as we talked about last time, building up the criteria for which you would trade the stock, and get you settled into this idea that we're going to fish, and we're going to either use a bobber, or we're going to troll, or we're going to do casting, but we are not going to dive out of the helicopter and just tackle that stock and beat it to death, right? And by the way, that is probably a 10-foot marlin, I'm guessing, because the nose, the beak out there goes a little ways, and the tail you can't see, and he's approximately 6 feet tall. So you can imagine that I had the good fortune of bringing in an 8-foot marlin, so 2 feet shorter than that, but it was big. What a fight, what a thrill. But that is different than the way we want to trade the market. I just have always loved it. If you haven't ever seen this, watch the video. So he's actually got some videos. It's pretty cool. All right. All right. So Charles says, hey, could we look at CMG? Absolutely. So Charles, thanks for giving us a kickoff here. I'm going to shift over to the charts, and that should bring up I got to move something out of the way real quick. Let's get an update. Okay, so let me jot this down. So we do CMG. Let's see. Jennifer says, how about Adobe, AMD, and the SPY? Guys, go ahead and put your requests in. I'll just make a list and we'll go down and see how far we can go. Okay. Brenda says MARA. AMD we've got already. Micron. Okay. Just jotting these down. Anybody else? Put in your requests and we will. Gene says Roku. Okay. Jim says Apple. Okay, let's start with this. All right, so Charles, let's see. I've got to move something else out of the way so I can see. All right, the very first thing that I would do is I'd look at this and make the, well, first of all, Charles, questions. Let me, if you have any specific things that you want to address on this, go ahead and jot that down, Charles. I'll just start the way I would normally start, which is I'm going to look at perspective. So this goes back to December of 2022. Okay, so we'll go back a little over a year. And we can see that we've been in an uptrend. We've been climbing in that period of a little over a year. We're up at about 2,700. We started at about 1,300 a year ago. So we've had a double in CMG. That's pretty remarkable, right? That's pretty awesome. Charles said, just want to kick off the charting. Okay, no problem. All right, so I will demonstrate. First thing I'm going to do is to go to a monthly chart because I want to see some perspective on CMG. Has it ever been this high before? Nope, looks as where it's at is an all-time high. It looks to me like, and it seems pretty clear, that since 2018, we have had a climb on this stock that has gone from what, $250, $275 all the way up to $2,700. So CMG in a pretty spectacular run here is at an all-time high. So I'm going to reduce this down, go to a weekly chart. And I'm just looking for perspective in scale. If I'm interested in trading this, I'm looking for characteristics that would give me an indication of a good time to trade it. One of the things that I would look at is we are in an uptrend that has been going on. This is a weekly chart for 1, 2, 3, 4, 5, 6, 7 weeks. I'm going to drop back to a daily chart on this. And if we look at a daily chart, we see this last run here for several weeks, previous run for several weeks. We see a correction in here. I see gaps. I'm going to look back just a little bit farther to see if gaps are a significant thing in other areas. So we've got two big gaps here last year. Prior to that, there's a big gap back in here. And then I see gaps periodically. This is interesting. We've got an island right here. Here's an island on a gap. There's another island on a gap. We've essentially got a gap forming another concentration. It looks a little bit kind of like an island right here. We've got a vertical gap here to an all-time high that came back and tested and filled the gap and then took off again. So if I see gaps, I analyze them and I want to say, okay, so what is the characteristic of the gapping on this particular stock? Okay, does it have any characteristics? Is there any patterns that follow after a gap? And so what I'm looking for is filling of the gap. And I'm going to go back as far as I can see right in here. We've got, there's that little island there again. Gap gets filled. Here we've got a gap to a new all-time high. We don't come back and fill right away. We get a big double top. It eventually comes back, but take a look. There's the gap fill. We have first we get a concentration We get another concentration of trading that ties in with, and I'm going to move this back just a little bit. Well, I want to pull this up so I can see it a little better. And we'll back up. There we go. We'll add one more. Okay, there we go. I want you to take a look at this, guys, right here. This would be something that I would note as very important, because this tells you that there is some price recognition that is involved with the traders on this stock that is pretty clear. Okay, you can see the concentration we had. This is a little island gap right here. It's significant. You gap up, you trade for 2 or 3 weeks, and then you gap back down, you leave it empty, and it comes back up, and we fill the gap twice with more concentration. So this is a price point, failed rally, gap, bullish gap on a reversal that failed. And finally, it takes off. Okay, great. Now we'll look at some of the other things, but I want you to see that 3 months later, we come back to this same concentration, the same price point, and it recognize it and rally off of it. Come up, we get a little triple top here, it comes back down, we recognize it again, and away we go. This is a significant price. This $1,376-ish is a significant price. Is it relevant to where it's at right now? No, but it certainly could be. And what I'm looking back on here is I'm looking to see how disciplined the traders are to recognizing previous price points that are significant. I'm going to go back up right here, and I'm going to give you another line. This was an all-time high right here. I want to see how a significant price like an all-time high was recognized later on. Okay, we came back. This was a big kind of a significant dearth, or if you will, a correction. This goes from September of 2021 until April and May of 2023. Okay, so more than a year and a half later, after a big correction. And I'm going to go back to a monthly chart and show you this big correction right here lasted a year and a half. This was a heck of a run up. This went from 300 up here to almost 2,000. And then you had a correction. And that correction lasted for a year and a half before it got back to that same price. I'll go back to a daily chart. And what we're looking at is in April-ish, yeah, we're still in April here of 23, this last April, we had a big gap associated with earnings. We had a gap here. It gaps, it comes back down, it fills that, not gap, but it comes back to fill the jump back to the previous all-time high, and then it takes off. Then we have a gap down. This creates the island, and we're right back to this price consolidation that was the all-time high, this 1,950 to 2,000. We pull back, we hit it again, we pull back, we come up, and boom, we finally break through. What I'm looking for is there history? Is there recognition and remembrance with the traders on CMG on previous significant prices? And the answer is yes. Can we use that? Yes, we can. It's a characteristics part of the dossier for trading the stock. Okay, now we're not analyzing the trend yet or where it's at in the trend. We're familiarizing ourselves with the stock. I want you to see something else. Here, another all-time high that is followed by, let me pop it right there. We had a nice little uptrend here that we ran out of this bullish breakout. There we go. And we have 1, 2, 3, 4 rotations, and then it gaps with a breakdown. Where does it go to? Well, it gaps back down to this 2,000 range. 1950, 2000 range. We slip, we slide, we come back, we hit that and fall again. So where do we go? So we tried to get back to this old all-time high price, hang on to this, and failed. So where do we go? We go back and we fill the gap. And we get 1, 2, 3, 4 bounces, 5 bounces off of that, and then it takes off. So this is called a frying pan bottom. We have a frying pan bottom as we fill the gap, and then it takes off. I'm going to zoom in a little bit closer now because I want you to see what happens when we come off of this frying pan bottom. Now, could you look at this and call it a reverse head and shoulders? Yeah, you could stretch it and say, well, there's a shoulder, a head, and a shoulder. But the truth is it's a multiple bottom, a frying pan bottom, bounce, 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 and then it takes off. And we come up to the previous resistance, we break out. And when we break out, we have to have a target. You look to the left. Where's the target? We look back to the last activity. Well, the target is the previous all-time high. That's the ultimate target. Could we have gotten stuck in here where there's a whole lot of price activity? Yes. In fact, it did hesitate there. Once it pushes through, the target is the previous all-time high. What happens? We get there and we spend 1, 2, 3, 4, 5, 6 days before it moves above that, comes back, bounces on it, and then lifts off. Great. So we have a new uptrend. Okay. We have a new uptrend. Currently, I'm going to go back and I'm going to lay up the trend line on kind of a macro level. I'm going to start with the big picture down here at the bottom of the major reversal. And I'm going to lay this up at that angle of attack. Now, we're nowhere near that right now. We may not be near that ever again. Okay. But this is a baseline. I'm going to use this to see if this had any influence over the trading. Not seeing it quite yet. I'm looking. Okay. Influence? Maybe. Now watch. I'm going to take those last 3 off. Again, I'm looking. I'm building the dossier. Okay. If that macro is not seeming to influence it right now, then we just go in one step closer. We go in a little bit closer. So we're going to go to this angle of attack, and we're going to say, as we took off from the correction, the 1.5-year correction, the first rotation, guys, sets right here. The first rotation sets the first lane on the freeway. That's what I call them, lane on the freeway. There's the first correction. Okay, we come back. There's the second one. Okay, now I'm going to move this back just a little bit. There we go. And I'm going to put one more lane on the freeway. And this is just a pure guess, but I'm going to go up to the top of this and go, oh my gosh, what have we here? Okay. I don't think these are coincidences, guys. I'm going to extend this one up. All right. Now, this is what I refer to as an angle of attack. Charles says, June and July of 23, I had drawn a trend on CMG. I have a habit of extending my lines. CMG has been trading in those lines for 16 trading days as we speak. Thanks, Ryan. I always wonder who I learned all that good stuff from. Angle of attack. Yeah, so Charles is saying, hey, I kind of drew the same lines. And Charles, I do think that, that it's not unfair to take a little credit for that. I'm glad you paid attention because these are just things that are observations. And if you can see them, if they are happening, they are a pattern. I tell you guys, if there's no pattern, there's no trade. Okay. And I believe that. Don't force it. If it's not there, don't force it. Now, this is coming back to the original angle of attack. This vertical spike here, after it dropped out of the pattern, it took off and basically it's catching up. Now, what I want to do is I'm going to double click on this line and watch. We're going to lay this up and presto changeo. This is what we're in now. So now what what we're looking at here is this from October of 23. This channel going up here is playing into the bigger picture, the long term. There's more than one reason for this to be significant now. I'm going to zoom in on this a little bit closer, because before you ever make a trade, you start as far back as you need to get the perspective, and then you zero in on what's important or what's relative right now. What I see a couple of things that are pretty significant. This is an all-time high from 3 weeks ago. There's been now a consolidation, tight consolidation. It's trying to rally back up, but I don't see any big days. There isn't any strong days here. These are all small, normal to smaller than normal days. No big days. I immediately then will look at my MACD down here and say, what's going on? We are up here trying to test the all-time high. In fact, yesterday, from a closing standpoint, it was an all-time high. But I see MACD going, yeah, maybe not. Really? Yep, maybe not. I look at MACD right back here in November. Pushed up all-time high. Hesitated. Pushed up again. All-time high, new all-time high. MACD says, yeah, I don't think so. And it came up and said, well, maybe we can try. And MACD goes, nah. And then we have a correction. We come back to a baseline. We come back to a price consolidation. And then we try up again. So here we go. Up, 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 up. New all-time high. Pulls back. Okay, here we go again. MACD's going, yeah, I don't think so. Now, can we trust MACD on CMG? And the answer is, well, let's find out, shall we? Let's show a little bit more. Let's see any other times where we've had MACD divergence. How about, boy, how about right here? How about last April? Gap, earnings gap, all-time high. Yay, push, push, push up higher. MACD goes, no, I don't think so. Oh, come on, come on. And now it drifts out sideways. Now, what happened with MACD coming down here is not necessarily a bearish signal. What it is when the stocks start going sideways, when they quit moving, trending either up or down, MACD tends to go back to zero. It'll shift back to zero. So with these repeated failed attempts to take off on another rally, it plateaus here. This is the opposite of the frying pan bottom. But it plateaus here, and you can see MACD centers back to, gets back to about the zero line. Then it pushes up. Now we break out to an all-time high, yay, and pulls back, and it pushes up again. Okay, we're going to get out of this thing. And MACD goes, it's just not there. It's not there. Sorry. And then boom, gap, and down it goes. Okay, so I would call MACD signal here. There's a positive signal for MACD. Positive meaning it was accurate. In this case, it was a bear signal, but it was accurate. Here, was it accurate? Not so much, because the stock just went sideways, went sideways. MACD drifts back to zero. Okay. If you look back in here, all it did was confirm. MACD, most of the time, all it does is shadow what the stock is doing. We pay attention when it diverts. That's the key. When it diverts, that's when we pay attention. Okay. So now there's the rally up. It agrees, and then we just drift back down. Now it starts to push new highs again. Here we go. MACD's going, no, just not feeling it, and boom. So it's right again. So we come down here. We have a low. We try to rally up. The stock falls down to a lower low, lower low, lower low. What's happening with MACD? MACD's here going, no, it's hang in there. This is not so bad. And we've got divergence with MACD across these bottoms. We have lower lows and MACD going, no, I think we're probably okay. There's a bullish divergence and that works. We come up here. There's another one that works. So looking back, I'm seeing what, 3 out of 4 of the last rotation or MACD divergences, 3 out of 4 were accurate at predicting a reversal, one, bullish and bearish. So what have we got now? Right now, we've got a MACD that's going, yeah, I don't think so. You've had a run that's gone from 1795-ish up to 27. So 1,000-point run in Chipotle. And MACD's going, yeah, I don't buy it. Well, okay, so how do we trade this, bearish or bullish? The answer is we go fishing, which means we set up criteria. We say, well, if it does this, I'll do that. If it does that, I'll do this. We set up criteria, conditional criteria. Right now, we have a resistance level up here at about 2,700. We have a target. Okay. If I pull this down just a little bit and we extend this line, we have a target. If we break the upside, break the all-time high, gotta go just a touch, too much. Come on. Where was it? Right there. Okay. So we've got a target up here around 28, 2,900 if we get a breakout. If it pulls back, we're already in a consolidation right here. We're already in a box. Anything in here is nothing. It's just consolidation at a price point that it's comfortable with. If it falls back down, if it drifts sideways long enough to where it catches this bottom trend line or it drops down to it, that would be a trading place for me. I would set up a target. I'd put a bobber out there with a worm hanging so many inches from the surface because I'm thinking if it follows the pattern, there should be fish here in a few days. And you could set up this as a catch point. You could also set up here and say, if we get up to this range, I'm going to be looking to set up a trade, bullish or bearish, either one. If it bounces and pulls back, we'll go bearish. If it breaks through, great. Could we do something right now? Yes, it's possible. And you would look at this right about like so. And you would say, this takes out, let me change this a little bit. We have to take out the high from 3 weeks ago, which on that day, the high was, I can't see it because of the camera here. All right, the high on this day was, that is the all-time high, 27.25 on that day. Yesterday, we had 27.03. Okay, so not quite. So if we take out 27.25, there's a potential run up here to about 28.50. So there's about a 75-point run potential on Chipotle on the short term. So my trade on Chipotle would not be bearish ever here because we're in a box and just bouncing around in this box, it's like climbing in the dryer and putting in $1 and just hanging on and getting beat to death. This is really choppy. It's not easy to trade in here, but a breakout for 75 points. Yeah, there's an opportunity. What happens when you get up here? Well, then there's a new opportunity. What if it pulls back down to the trend line of 25.70 or so? Well, then there's a new opportunity. Okay. Charles, is that helpful? That's the analysis of Chipotle as I see it. That's the short term. This is the trading analysis. But the big picture on this, of course, you have to take in this to factor in the big picture on Chipotle. If it starts trading outside of the current trend that it's in, it tends to fall back into something else. If this one follows patterns from the past, and it's being influenced both by the trend that it's in and the long term, the longer term perspective. Okay. All right, great. Okay, let's get going. So I took a little more time on this to kind of demonstrate how we do this. Jennifer says, wow, thank you very much, Jennifer. So let's do this. Adobe, this is for Jennifer. Let's see what we got. All right, Adobe. First thing I'm going to do is look back. So I'll go to a weekly chart first. That's enough right there. Cut this back. There's a weekly chart. We're not at an all-time high. Adobe's all-time high happened back here in 2021, and we're not there. We took a major correction from October and November 21 down to October 22. So in 1 year, we dropped from 700 down to 290, 270, 280, around this range. That's pretty big yikes, don't you think? Especially for a company like Adobe. Now, is there anything wrong with Adobe? Well, obviously they took some hits, but they're still a player, right? I mean, they're still getting my money. So we want to find out, okay, so are there patterns? Does Adobe follow patterns? Well, there's a couple things that jump out at me right to start with, and I see a long-term trend that runs right through here. In the shorter term, looking back on this, I look for lanes on the freeway, and that's what these are called, lanes on the freeway. So while this was doing, even though it has other trends that happen inside of it, this is kind of the macro. I'm just looking to see if there's correlation, and there usually is. These are lanes on the freeway. Now I just keep going. Double click, we lay this up here. I just go to the next major reversal levels. Okay. Now, in the meantime, starting back here on this big pullback in March of 20, we look at this big run. Now, obviously, it starts here. This would be the shorter term trend. Then when it corrects and gets going again, it lays down another expectation like this. Now, watch this one. We double click on here and we go up and we go, booyah. Okay, so there's a short trend, there's a correction, there's the next trend up, and it's a shorter trend is morphing into a bigger trend. There's patterns inside of patterns. And I'm just showing you kind of the macro, the big view. There's lots of things to show you inside of all of that. But to get to where we're doing today, all we're doing is establishing that Adobe does follow patterns. Okay, it does follow trends. So we're going to zoom in a little bit and say, okay, so what does that have to do with where we're at right now? Okay, we're going to change the perspective on this just a little bit. And we'll say, okay, let's identify our all-time high right here. Okay, we've come off of a correction and we started to trend upward right here. This went for about a month. And then we get a big boost and we start climbing. When you start climbing out of a correction, you look to the left. And I look for correlation to previous price points. I'm not seeing a lot. I'm looking at this slope coming down, looking for significant things that happened on this slope coming down that influence it going back up. Here's the first one right here. I'm going to take this down just a touch right in there. Okay, major price consolidation. These are up, down, bam, 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 bam. Comes back, bounces on it again, gaps down. Now we come back up, boom, we hit this, and this becomes like a ceiling. We smash our head into it, we smash our head again to it, and then we finally break through. When you break through, you look to the left and you say, okay, what's the next significant resistance that could get in our way? Well, it would be these tops right here. Okay, did we have any problem breaking through that? Nope. Nope, we didn't. What's the next one? Well, there really isn't any next significant price points until we get to here. And why is this significant right in here? Well, it's significant because this as a big double top, a big M top, there's the midpoint of the M. There's the confirmation that was the breakdown of the trend. Now remember, we had a nice uptrend, nice follow through, and there was a battle that was fought there and they lost and they break through. And you come back down, we look for price consolidation. We're seeing it there, we're seeing it there. And so now we zoom back in and say, okay, our next resistance point was right up here. What happened? Well, we got there, we hit our head, we pulled back, hit our head, pulled back, came up, punched through it, and then came back and landed on it. So this is where this is going to get kind of interesting here. If you pay attention. Oh, come on. I just want to extend this line. There we go. All right, so here's what's interesting. This was a price recognition here of a significant price. Hit it once, hit it twice, break through, come back, land on it once, come back and break through, and it's coming back up here. This is where the fight is going on with Adobe right now. The traders are trying to decide, can we dig in and hold this resistance as new support and get going, or do we have to go somewhere else? If they have to go somewhere else, guys, this is the obvious place to go. Now, can I tell you where a stock is going to go? Tongue in cheek, remember the disclaimer, I will say yes. Here's the qualifier. If the stock follows, or if the traders follow the pattern, this is what they will do. Listen to the words. If they follow the pattern. What's the pattern? Well, we had price support, strong price support at 505. Bounce once, bounce twice, bounce three times. Three times they rallied off of 505 and jumped 50 points. 50-point jump three times off of 505. Now we go from 505 up into this 629, 630 range, and we come back to 505. Or excuse me, the 50-point jump, which is the 555, 565 range right in here. That 50-point jump. We bounce once, we come back and we slip through and go whoop, 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 and we're fighting back up here. I can update it for today. I don't know where it's at right today without updating it. But we're trying to hold on. If they can't hold on here, where is support? If they follow the pattern, support is here at 505. So if they have to find a greater support from the market in order to stabilize this, they'll probably find it at 505. Why? Because they found it before. That's the pattern. If they can get stabilized here and go again, then there is a very obvious target of make this a little tighter and push it up. Well, okay, there it is. That's close enough. Your range on the upside targeting is around 630-ish, plus or minus. That's where resistance is. That would be the upside target. Downside target, if we need to find support, 505, 502, 503, whatever, in this range. They're digging in, trying to hold on to this 560-ish area. There's price support here. There's also potential weakness. If they can't find the rally, you go back down to find the buyers. If you can't find buyers at 560, you'll likely find them at 505, 504, 503. If you can find 5 buyers to jump again, then it is an easy run up to here. Why is it easy? Because it's done it twice before in recent memory. In just the last few weeks, it's made a run from the 560 range up to the 630 range. Okay, 70 points-ish. Twice in the last few weeks. That should be an easy run if they can get it started again. If they can't, go back and find support. Jennifer says, looks like another M now. Maybe. Maybe. It could be a triple top. It could come up and fail. If it makes a weak attempt, then you'd have a triple top. You'd have a reverse head and shoulder right side down or excuse me, a head and shoulders right side down, which would be a pretty strong bearish signal. So let's look at MACD. Does MACD help us out here? And I can't take as much time on every stock. I want to jump and do a few more. But what's MACD doing? Well, again, I told you that when the stock goes sideways and just consolidates, MACD tends to start to dribble. It just starts to drool, right? We push to a new high here. It pulls back. A few days ago, we pushed to a new high. MACD's going, nope, nope, it's not there. I take this as a signal right here. This would be a bearish signal. And all that does is tell me is that if this thing starts to drop, I'm going to be, personally, I would be looking for an opportunity to make another trade down here in the 503, 505 range. That would be the next major pivot point. Would I trade it from where it's at down here? Maybe, but it'd be a short-term trade just to try to get back to another pivot point. Okay, MACD is bearish right here. Okay, so what? Well, I look back here and say, all right, do I have a MACD signal here? I do. Did it work? No, this is a bullish signal and it collapses and comes down again. We come up here, higher high, higher high. It's just a green. Everything's just a green. Let's go back a little farther with MACD. Does it work on this stock? Right here? Oh, yeah, this is a good one. This is a real good one. All-time high, push up. Well, not, yeah, I guess it is. And then, boom, major collapse. MACD was going, you look pretty, but you stink. That's what it's saying. You look pretty, but you stink. Here it is, agreeing with the stock. Here it is, just collapsing back to zero because the stock is in compression. Okay. Here we go, agreeing with the stock, agreeing with the stock. So I have one great example of MACD working, and I've got a couple where it's not so much. And then mostly it just follows the stock. I'm not going to lean too heavily on MACD, except the last time we were in a double top formation, it was right as rain. Right here, same thing. It was right as rain as we came up and do this. It was predicting this bearish. So I think I would pay attention to MACD. It's not going to, I'm not going to trade off of it, but if I trade bearish on this thing, MACD would give me another reason to lean into a bearish trade. All right. Adobe has earnings coming up. Yes, they do. Yes, they do. So you have to factor that into the news for sure. But I'm just showing you where it's at. So from an earnings standpoint, if we look back, I'll play on this one. If we look back on earnings, when we look at earnings plays, and we're not showing them all here, I need to do that, but I'm not going to take the time right now. But what you want to do is look at how big of moves you get with earnings moves with MACD or with AMD. How big are the earnings moves? Okay. And that would show you which direction, or from a targeting standpoint, if it gaps or moves hard on earnings. If it moves up, that's your target. If it moves down, that would be the target on any significant move on earnings, up or down. Okay. To be fair here, I'm going to skip and go down to Brenda, and we're going to do MRAR. Brenda, comments, questions? What do you want to see on this? Jennifer, thank you. You're welcome. What are the blue sticks on the bottom telling us? Oh, the blue sticks on the bottom is just a different way of showing, Gene, MACD. It's showing this. Oh gosh, it's there's a term for it, but basically you can see it is mirroring. It's a different way to show MACD. Okay, so it visually displays the same signal differently. Brenda says, analyze it, please. Okay, here we go. We go back in time. I'm going back on a daily chart, and I'm realizing I need to look at a weekly to put this in perspective. And this definitely gives me enough. Okay, I don't need to go back any farther. All right, so Marathon, you can see, has been up here as high as, we get a range up here about $85, currently trading at $25. There is a huge price history support. Try that again. There's a huge price support down here at $4, plus or minus $40. Okay. We have a history of a couple of major failed rallies over the last year or so at $18. Now, this is a far different trading stock than CMG or even AMD or Adobe. What we've got going on is we've got some pretty nice price recognition. You got patterns. You've got a price trading range of about $19, and you've got $4 that are very powerful in this stock. You've also got I'm going to go back to a zone here because you've had consolidation, and we go back to a daily chart. I'll give you this in a daily picture. In a daily chart, we've got compression. Let me just take that one out. It's easier to do that than it is to. All right, now we'll zoom in on this a little bit. On the daily chart, we have been bouncing back and forth in a range here between 22 and 32, so about a $10 range. And it's making these $10 swings in a matter of just a few days. So even though this is a much smaller stock, you're in a trading range here that has $8 to $10 moves, and it's doing it in just a matter of a few days. Is that tradable? And the answer is, well, it looks like it could be. As long as it stays in this range, picking up 5 or 6 points out of a 8 to 10 point move coming off support and resistance, that's not a bad thing. But could you get caught in a whipsaw right in here where it just bangs around for several days? Absolutely. It looked really nice. You had a big 10-point run up, 10-point drop, and then it gets caught in the dryer and you just get beat to death for a few days. We drop back down, come back up into this range, and now we're taking these swings again. So right now, you're trading in a tight trading range of just a few dollars. It's not like the prices on the options are going to be fairly inexpensive. And so could you trade inside of here for trying to pick up 5 points out of a 8 to 10 point move coming off support and resistance? Yeah, it's possible. It's possible. But recognize you do have targets. There is nothing in between $23 and about $19, so about a $4 drop in there. There's really nothing there to stop the stock from jumping across it. In fact, it's done it once, twice, 3 times. For some reason, it skips this. It goes really quickly across this price range. We get stuck down in here. We're stuck up in here. So until something changes, you're in a trading range. You're bound up. And it's not like it's not tradable, but it's a tight trading range. And there's even a tighter one down here that would really powerfully support a move to the downside simply because there's history here. I can get this. There you go. Yeah, all right. And so you've got price support down in this range that's pretty strong if it drops. On the upside, you break out above 32. Well, what happens? You look back here and you go, whoa, I got smooth sailing. Well, wait a minute. I see 1, 2, 3, 4, 5, 6. I see about 10 reasons to have to fight through this area that we're in now. Why is it having such a trouble? I can't get that line to come straight. Why is it having so much trouble fighting through this price range? There's a lot of history here, guys. A lot of history. On the other side, it's pretty open. So if you can break out above 32, 33, there's some room to run on this thing. But does this help you see why we're kind of stuck beating our heads against 32-ish? There's a lot of price history back there. There's a lot of memory. On the other side, there's some open running. Right now, it's kind of stuck. Okay, Brenda, did that help? You are welcome. Welcome. I am going to give just a few seconds to Roku. Gene was hoping that I would get to this. Let me just do a real quick analysis on Roku for you. Let's stick with well, no, let's go to a weekly chart. There you go. All right, so Roku is, I'm going to show you some macro analysis on this real quick. I'm going to go back in history. I'm going to say, why is it stuck here for almost a year? Why are we stuck in this trading range? When we go back historically, I'm going to go to a weekly, no, monthly chart. Okay. Roku is back to almost where it started. I'm going to give you just a little bit of a hint of maybe from a pattern standpoint. There we go. Okay, we have something. Now, I don't know from a business model standpoint, the way, I tell you what, guys, the way delivery and content is going, some of the technologies are going to survive and some aren't. Okay. Some are going to survive and some aren't. Now, Roku has had a glorious past. Are they going to survive the changes that are happening in media content delivery? Dish, interesting. You can get all the Dish set channels now through the internet. You don't have to have a dish anymore. Is Roku going to continue to be one of the major suppliers? They have had virtually no change in price in a year and a half. So I'm saying this is a difficult play. This is difficult to come up with. Now, if you can trade inside of these swings, and these are pretty big swings over the course of how many days? Yeah, but this is a gappy, jumpy stock. Scares the crap out of me, I'll tell you right now. Sorry, the French. I wouldn't trade this personally. That's just me, because I don't see how to trade it. I look at this, I see gaps that come all over the place. I don't see any tight patterning trading right now that jumps out at me. I just don't. So Gene, that's all I could tell you on that. I just that one just I don't see, that doesn't appeal to me. Okay. Apple for Jim. First things first, Jim. We have a big descending wedge pattern going on here. This tends to be a squeeze play, meaning that pressure is on and at some point the pressure comes off. And this either releases to the upside or it releases to the downside. Now that may seem like a silly thing to say, but it's true. When you press it into a wedge, you're either going to release to the upside or the downside. I go to a weekly chart, I go to a monthly chart, and I say, wow, Apple is at a major threshold here. They've been stuck for a long time, right? A long time. We zoom in on this a little bit, go back to a weekly chart, give it a little perspective. There we go. And you can see the wedge. Now, what this tells me is a break to the upside has a huge potential to run to 200. Why? We've done it twice before, almost 3 times, 195 to 200, big draw up there on the upside. On the downside, what's waiting for it on the downside? Where do you go to find price consolidation and price compliance where people are in agreement? Okay, well, there's some good history down here at 166. We go back to a daily chart and price history 166. It's there. Okay, big rally. It went from 166 up to 200. Okay, so we have targets, folks. We have targets. We have a price history up here in this 195 to 200 range, big draw. We got price history and support down here at 166 plus or minus. And in between, there's not much. It's an open field run to the upside, and it's a well to the downside. It's like falling down a well potentially. On the upside, you have a little bit of resistance points. You'll hit each one of these failed rallies, but the target on the upside push would definitely be up here. On the downside, if it follows the pattern, that's where it'll go. There you go, guys. We went too far. I just wanted to give everybody a little bit, and I hope you enjoyed the class. This is the kind of thing I want to continue to do more of. If you like this, this is where we can apply all the things that we've been talking about over the last couple of years, and we can answer to them, right? We can say, well, tell me more about MACD. See, we didn't even talk about MACD with Apple, but I want to show you how I utilize all the tools to do analysis on this. Okay. All right, guys. Thanks very much. Jennifer.